Hi everyone, I'm Greg McCunn, CEO at Galiano Gold. It's been hard to get out and see you, our shareholders and stakeholders, with the COVID-19 travel restrictions. So we thought we'd try something a little bit different. Normally we post a monthly update for the company on our website in the form of a PowerPoint presentation. Instead of just putting up that static presentation this month, we thought we'd have me narrate it for you. If you'd rather just download the static version, that's available on our website as well, www.galianogold.com. But if you'd like to hear the narration, here we go. So I will make some forward-looking statements during the presentation today. Now, as most of you would have seen, we just recently changed our name from Asanko Gold to Galiano Gold. So we now trade under the ticker GAU on both the Toronto Stock Exchange and the New York Stock Exchange. Now, the reason for that name change we'll talk to in this presentation. We do have a refreshed board, a refreshed management team, and over the last year we've been taking the company in a different direction, away from projects, capital spending, and more onto cash flow generation from our mine, the Asanko Gold Mine, which is located in Ghana, West Africa. So for those of you who are new to the story, we do operate the Asanko Gold Mine. It is located in Ghana, West Africa. It's a 50-50 joint venture between ourselves and Gold Fields. That's also a second reason for the name change, that this helps separate the corporate entity from the name of our main asset. So last year, the mine produced about 251,000 ounces of gold at an all-in sustaining cost of just over $1,100 an ounce. Now, corporately, we have a very strong treasury. We have just under $54 million in cash on hand at the end of last quarter. As well, you can see our market capitalization here, just over 250 million. These are US dollars, and our share price at the time of this presentation was about $1.15 US on the New York Stock Exchange. I'd just like to talk a minute about ESG, which is something that's very important right now for our shareholders. Now, for the company, for Galiano, we built this mine. We built the Asanko Gold Mine back in 2015. We put it into commercial production in early 2016. And for us, ESG has been something that's always been very important. And we called it getting our social license to operate. And as a new company coming into Ghana, where we have several major gold mining companies operating, Newmont, Kinross, Anglo Gold Ashanti, our joint venture partners, Gold Fields, for example, all operating mines. It was very important that we have a strong social program to gain our social license. So in the early days of exploration and through the construction phase, we paid a lot of attention to this, and I think we did a lot of things right, and we have a very strong social license to operate in Ghana. And a lot of these programs have culminated in us winning the Ghanaian Mining Company of the Year award for 2 years in a row. Now, ESG is something that certainly has shifted from just having a social license to operate into a much more internationally recognized standard way of reporting on your progress against social items, for the environment, for social items, and for governance-related items. So ESG is something that we've had to start shifting our focus on, to reporting against international recognized standards. We've really increased our focus on this. We just recently hired an EVP of Sustainability, Todd Romaine, who joined us in April. We've strengthened our board. We've added Judith Mosley to our board here at the start of this year. She's going to chair our newly branded Sustainability Committee. And really, this isn't doing the things that we were already doing well differently. It's just making sure that we communicate them well and that we do them in accordance with industry standards. So bottom line, here's what we'll leave you with, is ESG we recognize is very important, and it's something we're paying very close attention to. Now, looking more at the mine, at the asset itself, you can see here the Asanko Gold Mine has, over the last year, as I said at the outset of this, is we've really been focusing on trying to shift our focus away from projects and capital spending and onto generating cash flow. So the top right-hand graphic that you're looking at on the slide deck there, the blue bars are cash flow from operations from the last 5 quarters, going back to the start of 2019. And you can see at the start of 2019 really tells the story. We were investing all of the cash flow from operations back into projects, and the result is the blue line, the solid blue line. The free cash flow was negative in that quarter. Now, as we started to wind down these capital projects, focus on generating cash flow, and also over the course of the year, of course, we had an increase in the gold price. Our cash flow from operations obviously increased as a result, and importantly, the free cash flow increased. So the portion of that blue bar that was available for distribution to the joint venture partners increased. And you can see over the course of 2019, that continuously grew. And realistically, the first time that this mine was able to distribute cash back to the joint venture partners was in Q4 of last year. And over that 6-month period between Q4 and Q1 2020, the mine distributed 65 million in free cash flow back to the JV partners, so 32.5 million to Galiano. Now, there was a bit of a blip there in Q1 of 2020 on that cash flow from operations graph. That is cash flow from operations after working capital adjustments. And in a response to COVID-19, we did invest a substantial amount of working capital in Q1. In fact, about $20 million has gone into increasing our critical supplies ahead of our milling operations, as well as a critical stockpile of material ahead of the processing plant, so effectively mining the ore from the pits faster than we would have normally. And we think that's put us in a very strong position. We've been able to safely keep operating the mine throughout the COVID-19 outbreak, and we're well positioned to be able to keep doing that with this investment now made in inventory. That's something that as things start to come back to some semblance of normal, we can simply unwind that position. But if you were to adjust that graphic for the working capital, we would have seen about 56 million in cash flow from operations, and that upward trend would have continued. So as a result, on the bottom right-hand graph there, you'll see that's the Galiano corporate cash position. We've been able to effectively repair the balance sheet of the company over the last year. You go back to this time last year, the company had just less than $10 million in treasury, a very difficult position from which to operate a mining company. Over the course of the year and through distributions from the mine, we've now built that up, as I said earlier, to just under $54 million in cash and, of course, no debt. And what that's allowed us to do is to start returning some capital to our shareholders. So in November of last year, we did initiate a share buyback. We started repurchasing our shares on the open market and canceling them. As at the end of the first quarter, we had invested about $3 million in share buybacks and bought back about 3.5 million shares. So turning now to our outlook for 2020, what you can expect here from the company this year is more of the same from last year. We do have guidance of 225 to 245,000 ounces for calendar 2020. We're off to a great start. The mine had its best quarter ever in the first quarter of this year. We had record production at 66,300 ounces. We also had record low all-in sustaining costs against a record gold price. So it was a very good quarter. And needless to say, from a production standpoint, we're well on our way to achieving our guidance. Similarly, as I said, for all-in sustaining costs, our guidance is for between $1,000 and $100 an ounce for the year. We did also have an exceptional quarter. Our all-in sustaining costs in Q1 were $805 an ounce. Now, that's partly timing of sustaining capital. We do have about $9 million in capital expenditure and sustaining capital that's going to happen in Q2 and Q3 of this year to raise our tailings storage facility. So at this stage, we're looking like through our forecasts that we're going to be pretty much right up the middle of our annual guidance in terms of all-in sustaining costs at around $1,050 an ounce. Now, finally, we do have a couple of expenditures that are outside of our all-in sustaining costs. In particular, we have one major project on the go right now. We are relocating a village called the Tetrem village. It's immediately adjacent to our Asasi pit. We expect to spend about $24 million this year relocating that village, and that project is about 40% complete at this time. So in the first quarter, we spent about $6 million on the village relocation. You'd expect more of the same for each of the quarters of this year. Maybe some of that cash will spill over into Q1 of next year, but predominantly the project will be complete by the end of 2020. And certainly last but not least, we have made a commitment in 2020 to do more exploration. And so we've got a $10 million budget planned, and I'd just like to take a few minutes to talk to you about our exploration potential. So firstly here, you're looking at our land package on this next slide. We do have really a district scale land package. This is over 21,000 hectares. There are 3 main mining leases here, as well as 3 main exploration concessions. These 3 mining camps that you see on this slide consist of the Asasi camp to the north. You can see here we do have about 2.4 million ounces total of proven and probable reserves. The bulk of that is in this Asasi mining camp, about 1.45 million ounces. It's the blue shaded area. That pit has been under operations now for about a year and a half. We are hauling ore along that red line, which is an ore haul road. It's about 27 kilometers long. It goes to our processing plant, which is at the bottom of that orange shade area. That's right adjacent to our other main source of ore for our mining operations, the Encran pit. Now, Encran has been in production since the start of commercial production, so 4 years now. We are nearing completion of the second phase of ore there, and we are looking at opening up a third phase of ore starting in late 2022. Now, all of this is a mine plan is outlined in a new technical report, which we filed on CDAR in February. It shows we have a 10-year mine life producing about 2.1 million ounces of gold from this processing plant and these two main pits, as well as a few key satellite pits that you see here in the Obutan concessions. Especially, I would highlight the Akwasiso pit, which is currently being mined, and also the Abore pit, which is expected to be mined next year. Now, where the exploration potential comes in here is really at three main priorities, the top two here being the most important. So again, you're looking at our concession map here, just looking at it slightly differently. The three main mining concessions with the three exploration concessions. Really, we're looking at exploration as a way of not just extending this 10-year mine life, which it naturally will do if we find more reserves, but it's actually a way of making our business better over the next 3 to 5 years. So our top priority right now for exploration is priority number one is to replace depletion. And when I mentioned the two satellite pits that we were talking about earlier, Akwasiso and Abore, these are pits that are in our mining plan currently. We are going to be mining them this year and next year. They have infrastructure, truck workshops, roads, etc. established to them. And they do have a strong potential to extend the mineralization both at depth and along strike in both of those pits. And our intention here is to target with our drill program, which we're currently running, which is turning 4 drills. We've got a 38,000 meter program planned here in Q2 and Q3. Our primary intention with the first half of that drill program is to try and find the equivalent resources that we deplete in 2020 and 2021. So that's our number one priority. We believe we can do that at Akwasiso and Abore. So putting that in context, that's about 500,000 ounces of reserves that we hope to find there. Now, the second priority is, again, focused on trying to make our business plan better over the medium term. And I spoke about the Encran second phase of ore coming into recent, we're actually finishing up the second phase of ore at Encran, about to start the third phase in late 2022. Now, the third cut of ore is viable at $1,300 gold. In fact, it's quite profitable. It's very profitable at today's gold price of just over $1,700. But it does result in a fairly significant stripping program of over 18 months where there will be a drain on our cash flow that's available for distribution to our shareholders from that period, from late 2022 through 2023. So if we can find a near processing plant replacement for Encran Cut 3 that allows us to push that out by several years, our 5-year business plan will be much stronger. And by stronger, I mean it will generate more cash flow and generate better margins. So our number one priority for this is the red stars here that you see on this graphic. The stars are labeled star number one and star number two. That's for a reason. They are the number one and number two targets to try and defer Cut 3 at Encran. It's called the Tantachrome Miradani trend. We do have some drill results in this Tantachrome deposit in particular that we drilled last year. It looks very promising that there's a deposit there. It's really a 3-kilometer long trend of mineralization anchored at both ends by two targets, Miradani and Tantachrome, as I said. We expect to be in here drilling again in our current drill program. This will be the second half of our 38,000 meter drill program, and really the second half of our exploration spending in our budget. And what we're targeting here, just to put in perspective, the quantum of reserves in Encran Cut 3 is about 600,000 ounces of proven and probable reserves there. We're targeting initially to at least try and replace that or defer that in our mine plan. So bottom line on exploration is this is a highly prospective land package. We're very confident in our ability to try and replace reserves, to push out Encran Cut 3, and all of that is geared towards trying to improve our 5-year business plan. So just to summarize, I think what you can expect from Galiano over the next 18 months is to continue to deliver on our business plan. We had a great Q1. We're sitting here in early June with a good start to Q2, which we'll be reporting on in late July. You can expect us to continue to deliver against our guidance in 2020. And on top of that, we're going to be focusing and trying to improve the mine plan that we published back in February. And we're really going to be doing that in two ways: driving the cost structure of our business down at the Asanko Gold Mine and focusing on exploration to try and improve that 5-year business plan. So I look forward to being able to continue to update you with these types of results and this narrative. If you found this useful, please send us a comment, or even if you didn't find it useful, let us know. We're happy to look for new ways to try and communicate with our shareholders while we're still restricted from traveling. So I hope you're all safe, and thanks for your time and listening to the story of Galiano Gold.